This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended gains on Thursday on the prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil trade and as some OPEC producers pledged more output cuts to compensate for pumping above agreed quotas. Brent crude futures rose 56 cents, or 0.85%, to $66.41 a barrel by 0625 GMT, and U.S. West Texas Intermediate crude was at $63.12 a barrel, up 65 cents, or 1.04%. Both benchmarks settled 2% higher on Wednesday at their highest levels since April 3 and are on track for their first weekly rise in 3. Thursday is the last settlement day of the week ahead of the Good Friday and Easter holidays.
The United States on Wednesday issued new sanctions targeting Iran's oil exports, including against a China-based Teapot oil refinery, as President Donald Trump's administration seeks to ramp up pressure on Tehran. Teapot is an industry term for small independent oil refiners. The U.S. Treasury Department said in a statement the action would increase pressure on Chinese importers of Iranian oil as Trump seeks to restore his maximum pressure campaign on Iran, which includes efforts to drive its oil exports down to zero.
Moving on to the top news in the energy sector.
Russia's exports of Arctic oil to China are set to rise sharply in April after sellers offered wide discounts and shipment on non-sanctioned tankers to counter a U.S. embargo, analytics firm Vortexa and two Russian oil traders said. A tenth of Russia's seaborne oil exports make up the Arctic oil business disrupted by Washington's sweeping sanctions levied in January on nearly all tankers carrying supplies of grades such as Arco, Novi Port and Verandy, and producer Gazprom Neft. To evade the curbs, such cargoes go through international waters off Singapore and Malaysia to be transferred to very large crude carriers that have not been sanctioned, a process known as ship-to-ship transfers, before heading to China, said the traders and Vortexa senior analyst Emma Lee.
India plans to end taxes on U.S. ethane and liquefied petroleum gas, LPG, imports under broader negotiations with Washington as it looks to reduce its trade surplus and ease its tariff burden. 3 sources familiar with the matter said. The proposal to get rid of duties for the products used for cooking gas and petrochemical production comes as India mulls scrapping import tax for U.S. liquefied natural gas, LNG, and boosting purchases of the fuel from the United States. As President Donald Trump's sweeping duties rattle economies and markets, several Asian countries running trade surpluses with Washington are looking to import more U.S. energy in hopes of avoiding heavier tariffs. Next, we have the top news in metal markets. Shanghai copper firmed on Thursday as investors assessed trade negotiations between the U.S. and Japan, which buoyed market sentiment. The most traded copper contract on the Shanghai Futures Exchange has risen by 0.4% to 75,860 yuan, $10,377.28 per ton as of 0629 GMT. U.S. President Donald Trump said there was big progress when he made the surprise move on Wednesday to jump in on preliminary talks with a Japanese trade delegation in Washington about the barrage of tariffs he has imposed on global imports.
Gold prices pierced the $3,300 an ounce barrier to hit record highs as investors sought a refuge from the turbulence surrounding trade tensions between the United States and China. Spot gold hit a record of $3,317.90 per ounce on Wednesday, resuming a rally based on U.S. President Donald Trump's tariff policies, robust central bank buying and prospects of interest rate cuts by the Federal Reserve. Gold is recalibrating to reflect the current state of world affairs. If the price is telling us something, then it's a distinct warning bell, said independent analyst Ross Norman.
We will now look at the top news in the agricultural sector.
U.S. upland cotton exports to India have risen in the past few months fueled by global tariff conflicts, declining American prices and rising demand in the South Asian country, industry experts said. Exports to India from February to April jumped to 155,260 running bales, from 25,901 shipped during a year-ago period, according to the U.S. Department of Agriculture's data. The exports hit an over 2-1/2-year high in the week of February 20. The increase comes as Washington-Beijing trade tensions escalate, reducing U.S. cotton exports to China. China will impose 125% tariffs on U.S. goods, up from the 84% previously announced, the Finance Ministry said on Friday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.